Immersive, intriguing, and innovative, NIO Incorporated shares are taking a hit, plunging up to 7% after their 2024 first quarter earnings report. They posted a little above $1 billion in revenue, down 7.2% from last year and a massive 42.1% drop from last quarter, falling short of the $1.48 billion forecast. Vehicle deliveries also plummeted to 30,053 units, a drastic 39.9% drop from the previous quarter. The company reported a loss of 33 cents per share, slightly worse than the predicted 31 cents. Amid all the negative press and weak numbers, could this slump actually set the stage for a bounce back? This episode is packed with excitement. Be sure to watch until the end for a fantastic opportunity to diversify your investments with a reputable and undervalued company. Don't forget to like and share this video. Now, what's next for NIO's journey?
Keep in mind, we know that there's been a pricing war in the EV space in China, so that's part of the challenges that it's facing. So the second quarter looks like it will be better for NIO than its latest quarter.
Down 8%, brutal. Last week, we saw a little bit of strength in some of these names, but NIO's been a laggard now for a while. Really kind of seems like BYD is the way to go if you're trying to get exposure to this group. XPeng's been stuck. Lee's been making lows. It seems like BYD right now is not just the Chinese EV to go with, but the EV overall, since Tesla's been kind of stuck in the water.
Oh my gosh,
mired too. So Tesla trying to lift off a little bit here this morning, but the market overall is too. Thanks, Diane. Good stuff.
Automotive stocks like Tesla Incorporated have also been hit hard, with shares plunging to just 60% of their 52-week high. This drop thrusts Tesla deep into bear market territory, defined as a decline of 20% or more from recent highs. However, this slump isn't due to any significant negative developments in the electric vehicle sector. NIO stock is even worse off, crashing to only 30% of its 52-week high. Despite this, some investors believe NIO might be a deep value play now. Historically, NIO's vehicle deliveries peak in the second and third quarters of each fiscal year, with a surprising boost in the fourth quarter. Typically, the first quarter is the weakest. As per NIO's latest earnings report, it showed a 40% drop in deliveries for the first quarter. But monthly breakdowns reveal a different story. In April 2024, NIO delivered 15,620 vehicles, up 134.6% from April last year. May 2024 saw a further increase to 20,544 deliveries, a staggering 233.8% jump from May 2023, indicating rising demand. Looking at past trends, NIO's stock price crashed from around $14.20 to $7 in the first quarter of 2023, a drop of over 50%. However, in the second to third quarters, the stock rebounded to $15.80, a net gain of 125.7% from its low. Currently, analysts have set a consensus price target of $8.40 for NIO, suggesting a potential rally of 71.4% from its current position. Short interest in NIO has also fallen by 13.3% in the past month, indicating a shift in sentiment as bearish traders exit, leaving room for bullish investors to step in. Investors are picking up on a promising trend. It's a low-key tactic used to go long on a stock without drawing too much attention, focusing on how valuation multiples are shifting. Specifically for NIO, its price-to-sales and price-to-book ratios are moving differently from the rest of the auto sector. NIO's stock recently is at a 1.2x price-to-sales ratio, significantly cheaper than the auto sector's average price-to-sales ratio of 11.9x. This discount arises because investors are wary of Chinese equities, which might be an overreaction. Chinese inflation has been rising monthly for the last quarter, indicating a boost in domestic demand for goods, including electric vehicles. Consequently, the market is willing to pay more for NIO's book value. With a 2.5x price-to-book ratio, NIO trades at a 10.6% premium over the sector's 2.2x average price-to-book ratio. The reason behind this willingness to pay more is the positive outlook from NIO's management for the upcoming quarter.
We are also keeping a close watch on shares of Chinese EV company NIO after its CEO announced plans to expand to the Middle East this year. New York-listed shares of NIO are down 1%.
Management is aiming for deliveries of 54,000 to 56,000 units for the second quarter of 2024, marking a 138.1% increase from last year. This target, though ambitious, is within reach and hints at a possible bottoming for NIO stock. Despite recent losses, record deliveries show NIO is striving to stay relevant in the automotive industry. The company got a little over $2 billion cash boost last December, adding to the $739 million invested earlier in 2023 by an Abu Dhabi government-backed fund. This $3 billion should keep NIO running through 2024 and into 2025. Middle Eastern sovereign wealth funds, like Abu Dhabi's, invest with long-term strategies beyond the next fiscal year. With Abu Dhabi controlling about 20.1% of NIO, this patient capital is a significant asset for the company over the next 12 to 24 months. In February, NIO licensed its technology to For7 Limited, a subsidiary of CYVN Holdings LLC, which is connected to Abu Dhabi's major investment in NIO. This agreement allows For7 to use NIO's smart electric vehicle tech, software, and intellectual property. In exchange, NIO will get technology fees, including a fixed upfront payment and royalties on For7's future sales. On the other hand, NIO's Altman Z-score is minus 0.51, indicating potential bankruptcy risk within the next 24 months. However, NIO's strong ties with Abu Dhabi should offer some protection against this threat. The introduction of onvo, a lower-priced brand, will help reduce losses per vehicle in the latter half of 2024 and into 2025, and NIO remains a buy for investors willing to take on some risk. When it comes to reducing your risk of losses, why not consider diversifying your investment portfolio? According to a report by Michael Kim at Zacks, this company now has a price target of $3, up from 55 cents as of April 30th. Kim arrived at this target using a discounted cash flow model. Additionally, the report indicates strong potential for revenue growth in 2024. Ticker code DEFTF on the OTC. The company's name is Defi Technologies. It's profitable, growing, and insanely undervalued. It has brand recognition and huge, durable competitive advantages. Defi Technologies just reported its strongest financial quarter ever. In Q1 2024, they achieved record operating revenues of 13.4 million Canadian dollars, a significant jump compared to previous quarters. Even more impressive, they reported operating net income of 5.3 million Canadian dollars. A major turnaround from a net loss of 8.7 million Canadian dollars in the same period last year. This success wasn't just about financials. Defi Technologies also made some key strategic moves in Q1. Their subsidiary, Valour Incorporated, launched multiple exchange-traded products, or ETPs. Additionally, the company made a strategic acquisition with Reflexivity Research. These moves significantly enhanced Defi Technologies' product offerings and positioned them well for future growth. They also have joint ventures with Hive, Bitcoin Swiss, and Neuronomics, and a wholly owned subsidiary called Reflexivity Research. Valour, the crown jewel, creates ETPs, the EU's equivalent of ETFs, with KYC-cleared listed equity products on Bitcoin, Ethereum, and Solana. The company also has a venture portfolio, infrastructure, and partial ownership in Amina, which is a global smart bank offering a suite of regular crypto banking and investment services. One analyst gives a $3 price target. The company has already booked $94 million in revenue this year, with under a $500 million market cap. Where most public companies trade at 15 to 20x revenue, Defi is trading at only 3 to 4x. Defi Technologies has delivered a revenue growth of 78% in the past year, and the analysts' projections don't account for this growth. Hold on, it gets even better. Defi Technologies just announced a buyback program. I have never seen a $400 million company do this. They're loaded with cash, and management believes the stock is completely undervalued. This is a huge sign of confidence from the company. I believe this is an incredible investment opportunity. If you are interested in diversifying your position holdings in the crypto industry, it might be worth considering in addition to your AI or EV portfolio. That's it for our sponsor for this video, ticker code DEFTF on the OTC, Defi Technologies. Make sure to check out this amazing investment opportunity. Back to our favorite topic, NIO stock ratings. Analysts are bullish on NIO stock as of June 11th. According to Moomoo, analysts believe that the stock price will increase over time. The target price of $6.27 represents what analysts believe the stock price will be at some point in the future. In a recent discussion with Benzinga, Anthony Sassine, a seasoned investment strategist and portfolio manager at Crane Shares, shed light on NIO's promising trajectory and future prospects in the electric vehicle market. Sassine's insights provide a comprehensive overview of NIO's current standing and the strategic initiatives that could propel the company forward. One key aspect Sassine highlighted is NIO's recent model upgrades and promotional activities surrounding its battery-as-a-service offering. He noted that the completion of annual model upgrades positions NIO favorably for future sales growth. Additionally, the attractive promotions centered around battery-as-a-service could serve as a catalyst for driving consumer interest and boosting sales figures in the coming quarters. Furthermore, Sassine expressed enthusiasm regarding NIO's foray into the mass market segment with the launch of its onvo L60 vehicle. Positioned competitively below market expectations and Tesla's Model Y, the onvo L60 has the potential to broaden NIO's customer base and capture a larger market share. This strategic move underscores NIO's commitment to innovation and expanding its product portfolio to cater to diverse consumer preferences. In terms of future sales projections and margins, Sassine articulated a bullish outlook, anticipating NIO's electric vehicle sales to stabilize above 20,000 units by the fourth quarter of 2024. He attributed this optimistic forecast to anticipated improvements in gross margins driven by enhanced automation and the transition to a new manufacturing platform outperform. Such projections underscore NIO's resilience and potential for sustainable growth in the competitive electric vehicle landscape. Moreover, Sassine emphasized the significance of monitoring NIO's guidance on second quarter sales and margins, pre-order data for the onvo L60, and advancements in semi-solid-state battery technology. These factors serve as critical indicators of NIO's operational performance, technological innovation, and market positioning. While NIO's Q1 earnings may have caused some apprehension among investors, Sassine's strategic insights instill confidence in the company's ability to navigate challenges and capitalize on growth opportunities. As NIO continues to focus on new product launches, technological advancements, and market expansion initiatives, investors are advised to closely monitor developments and market responses in the upcoming quarters. Sassine's analysis paints a compelling picture of NIO's potential for recovery and sustained success in the dynamic electric vehicle market landscape. With a proactive approach to innovation, strategic planning, and market execution, NIO is well positioned to emerge as a key player in the global electric vehicle industry. While NIO's recent financial performance may have raised concerns, Anthony Sassine's insights highlight a clear path for potential recovery and growth. The company's strategic upgrades, new product launches, and promotional efforts signal a strong commitment to overcoming current challenges. As NIO continues to innovate and expand its market presence, the possibility of a turnaround becomes increasingly plausible. With record-breaking deliveries, significant investments, and a promising outlook from management, NIO appears ready to rise above its current struggles. The upcoming quarters will be crucial as NIO leverages its strengths to rebound in the competitive electric vehicle market. But with the stakes so high and the electric vehicle market ever-changing, the question here is, can NIO capitalize on these opportunities to stage a full-scale comeback and redefine its place in the industry? Share your insights in the comments below. If you enjoyed this video, you may also like our hand-picked, action-packed newsletter about NIO. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.